This is Keith Shabbat, your friend in the mortgage business, and today we're talking about FHA credit score requirements. In addition to your ability to pay your mortgage, FHA will look at your ability to repay as indicated by your credit report. Your willingness will be judged by your credit report records, that is, how well you've paid your loans and other debts in the past. If you are unsure what your credit report is like, you may want to begin by getting a lender's credit report that you can view immediately. To help you understand why credit is important and why FHA will look at your credit, please try to understand the following. Perfect credit is what you're supposed to have. Whenever you borrow money, credit cards, auto loans, student loans, etc., you're making a commitment to the creditor to pay them back on the terms mutually agreed upon. If you are late making the payment, then you broke the commitment and the lender can indicate this on your credit report. The lender does not know why you're late. They just know that you have broken the commitment agreed upon. They are not responsible in helping you manage your bills and debt, as they simply make an offer and the borrower accepts the terms. This is why your credit is very important in qualifying for a home loan. Although you are supposed to have perfect credit, FHA will allow for minor past credit issues as long as there is a reasonable reason why there was an issue. FHA will also look at your last 2 years of credit history. If there are some credit issues, you may be able to overcome them with sufficient explanations and supporting documentations of why this issue occurred. The following are some of the reasons FHA will accept: loss of job, job transfer, or serious illness. As long as it seems to make sense and it's not just because you did not make the payment or because you had too much other debt, you should not rule yourself out from qualifying for an FHA loan to buy a home because of credit issues until a mortgage professional has reviewed your credit. There are some credit issues that must allow for a certain time to pass before you can qualify for an FHA loan, otherwise known as seasoning, and they are as follows: 2 years from the date of a bankruptcy discharge and 3 years from the date of a foreclosure. Also, FHA would typically require that outstanding collection accounts, judgments, charge-offs be paid in full before closing your loan, but not necessarily before approving your loan. If you have a federal tax lien that is in repayment agreement, you do not have to pay it off in full, but you must be able to qualify for the monthly payment of the repayment agreement. State tax liens typically must be paid in full prior to closing your FHA loan. Another advantage of FHA loans is that FHA does not require a credit scoring item called a FICO score. So if you have no credit at all, you may still qualify for an FHA loan. If you have some credit, you will typically need a minimum credit score of a 620 to qualify for an FHA loan. When you apply to get pre-approved for an FHA loan, we will order a credit report for you. The credit report will show your record of payments on loans, charge accounts, and other similar debts. If you have never had a loan or a credit card, you can show that you have good credit on payments on your utility bills and rent payments. We will review your credit report with you. Should you have some credit issues that prohibit you from qualifying for an FHA loan now, we will show you how to correct these issues so that we can help you qualify for a purchase of your home in the future. In today's world, lenders are looking for a credit score of a 620 or better in order for you to qualify for an FHA mortgage. But the truth is, you can have a credit score lower than this with compensating factors. For credit scores below 620, please contact your mortgage consultants for more information. This is Keith Shabbat, your friend in the mortgage business.